What's up, traders? Anthony Crudele here, and thank you for tuning in to the Futures Radio Show podcast. I hope all of you had a wonderful Thanksgiving. It's great to be back on live with all of you. If you're watching on Twitter, please give us a retweet, and if you're on YouTube, hit that like button. We have one of my favorite guests for you today, Tracy Shuchart. You know her probably as Chigrl on Twitter, one of my favorite follows on Twitter, one of my first follows on Twitter, so definitely give her a follow there. And we'll be talking today about the Fed. We'll talk about Powell's latest comments. Tracy's been tweeting a lot about the current administration's energy policy, so we'll get her take on that, what she thinks about the energy markets as well. We'll talk about equities. I want to hear her what she thinks about the Russell, S&P, NASDAQ. We'll get into rates. Tracy's also been looking at platinum lately, so we will get into that and a whole lot more. We'll also be taking your questions live, so be sure to drop your questions in the YouTube chat. Before we get to Tracy, I want to remind all of you that Micro ETH are going live at CME on December 6th. To learn more about Micro ETH, go to cmegroup.com. I am really excited about that contract. Futures Radio Show is sponsored by CME Group, Trading Technologies, TradeStation, and FTSE Russell. The Russell 2000 is a key benchmark for small cap U.S. stocks. Be sure to check out the E-Mini Russell 2000 future symbol RTY and Micro E-Mini Russell 2000 future symbol M2K. To learn more about FTSE Russell and their products, please visit FTSERussell.com. Chigrl in the house.
Hey, good to see you again.
Good to see you. So I want to start off today with, actually, we're going to be pulling up charts early, everybody, because I want to really just get into the trenches with Tracy. I want to talk about Powell's statement. First, are you surprised that he was brought back in as Fed chair? What were your thoughts on that?
I was a little bit surprised, but I thought they would kind of go more the MMT brainer, but Powell's back, better the devil that you know, right?
Yeah, I mean, that's the one thing I will say is that, like, exactly how you said. At least we know, understand his style, the way he goes about putting out information. Right. And what did you think about his latest statement? I heard a lot of people, experts, right, say that they were surprised by it. I really have no opinion and when I hear these guys speak anymore. So to say I was surprised or not, I'm not really sure on that. I just waited to see what the action was. What were your thoughts on it?
Well, he killed transitory. Did you?
He did.
I said on the tweet. I'm like, finally. I was a bit surprised that he was as hawkish as he was. Obviously the markets reacted right away. They didn't really like it. So what my fear is that it's 2018 again, right? And they try to be really hawkish and then, they make their move and then it's a 180 immediately afterwards, right? And so I'm just kind of worried that we're looking at, we could be looking at kind of a repeat of like December 2018 if they, really do decide to try and raise rates.
Refresh everybody's memory about what happened after that.
The market tanked and then they freaked out and changed their mind.
And, what chart should we pull up for the equities to start to, I mean, let's pull up the S&P here. And I want to pull up the S&P because obviously that's the big boy market. And I think that when I look at the S&P, everybody said that the market really freaked out. And, I always go back to, and all I have up here right now is really a simple daily with a 10-day moving average, just to, give some context to everything that we're talking about. And the market's really, I mean, I know we're getting volatility, which is great, for traders, but I don't feel like it broke much of anything down. I think it was one of those things where, people are bullish, they have been bullish, and when you have some sort of reason to sell, they sell. So I don't know, in my mind, I don't know that I felt that it was that impactful, that much of a surprise, because here we are right back up to where we, not quite back to,
but it's the first of the month too. So
exactly, we should actually talk about that. I mean, because you and I know we have, we've been doing this for a long time. We also have a floor background. I don't think that people think enough about the end of the last day of the month and the first day of the month.
Right.
For the last day of the month is notorious in bull markets for selling days, and the first day of the month is notorious for buying days.
Yeah, absolutely. Because you have to remember, it's not only are people readjusting their books, right? Managers are readjusting their books, but that's like when people have their 401k entries, right? And so there's just there's a lot of buying generally on the first day in a bull market.
Yeah, exactly. I know it's one of my favorite trades. I remember when I was on the floor was the first day of the month. Because I started at the end of the '90s when everything was as bullish as it is now. Different, but just everybody you learn how to trade it alongside. And the first day of the month was just like every trader was long. And the last day of the month, right before the close, was the time where we do a lot of short trading. And so I guess when we look at the whole picture, when we look at the S&P, I mean, do you have any thoughts on it right now? Are you trading it at all?
I'm pretty. No, I haven't really been trading the S&P lately. I'm more trade RTY, small caps. But I mean, it doesn't look like we're in a technical breakdown. I mean, I don't think it's bad that some of the froth was kind of sold off there. Now, I mean, you could look at the daily and say, hey, maybe we're rolling over. But I don't think that we're looking at any sort of crash or not. And I think it was kind of a welcome air out of the market a little bit.
Yeah,
I
exactly.
mean,
I
I'm
like that.
bullish. I'm bullish. I'm very bullish. The United States in general, right? I mean, where else are you going to buy stuff? Europe, no. Right? China, no. So where's everybody putting their money in the U.S. market, right?
Yeah, so you said that you were trading the Russell. So let me just go to that chart because I want to look at that. This is a market. Actually, I got beat up on it this month. I traded the breakout. I lost on it. You and I actually were tweeting about this not too long ago. We
Yeah,
said if it eventually gets out of this, it was like I like that one analogy. I can't remember
it
who
was.
said it to me, but it broke out and then it came right back in. I got stopped out. But what do you think about
I
the
know.
Russell now?
I mean, it's always a tricky trade. I mean, for me, it's more of a short term trade, not really, you know, I not in the market for that long, but it was really nice to finally see a breakout after 7 months consolidating. Pretty much, right? But now we're right back into the consolidation area. But it was a fun trade there for a minute.
Yeah, I didn't cover it because I was trading it on a swing basis, and I actually added as it came back in, and it just got me out.
So
And now I'm just kind of stalled in it. But you said you're bullish on the U.S., and I always look
yeah.
at the Russell as the leader of that. If you're bullish, I always feel like if you look at the U.S. economy and tie it to a market, I always say the Russell, and then you see this.
Yeah, that's true. But, still, I mean, small caps have been performing pretty well actually this year, or at least I should say, like the energy small caps have been performing pretty well. Because really that's my focus. I don't really, I don't trade a lot of the other stuff. I'm mainly in, as far as equities are concerned, I'm, energy or materials. So, the smaller cap stocks have done pretty well or had some really good moves, some lately or this year, in my opinion. But again, I mean, energy was at the bottom last year. So,
Yeah, and that's the one thing that's different about the Russell versus the Nasdaq and the S&P is that the Russell is really sector based when the Nasdaq and the S&P can be very name based, right?
right. Well,
I
the
mean,
NASDAQ's 5 stocks, right?
yes, I
That's
mean,
it.
pretty much. And the Russell, you have, healthcare, you've got financials, and you've got that oil sector, energy sector. So, what are maybe some names inside the Russell that you're looking at, and maybe even as futures traders, we can pull them up for potential leadership.
What do I got? Let me look. I've got a lot on right now. um,
And while you're pulling that up, I mean, I just want to
right.
pick your brain when you
Yeah.
get to the point of like trying to pick some of these names in the energy sector on the stock side. What is your process for narrowing them down and choosing the ones you're choosing?
Well, I mean, generally, I've been staying away from sort of the large cap, definitely the oil majors, just because I think that if you look at what they're trying to do, I think they're, they've got a lot of money. Then they got a lot of money in this ESG, right? And they've got a lot of capital that they've got to put into things like carbon capture and all of these things that are politically motivated. Where I think if you really want like a pure oil play, I think what you should be looking at is more of like your mid-tier sector, right? And that's like pure oil and gas play, because those guys aren't going to go into solar and wind.
What do you think about the ESG play in general? That was one of the things I thought was going to be a big thing coming in with this administration because of a lot of reasons. But have you been looking at anything specifically purely off of this, this president, and maybe some plays off of, with the ESG?
I mean, really, there's a lot of mixed messages, and if you kind of look at the infrastructure package, there is some room for ESG, such as building out. They want to build out EV chargers, and things like that. But really, the package is really real heavy materials based, right, and heavy fossil fuel based. I mean, as far as trying to build out ESG infrastructure, you're going to need a ton of fossil fuels for that. You're going to need a ton of base metals and industrial metals just to build those things. I mean, wind turbines, solar panels, even EV charging stations. I mean, all those require a ton of energy, which is going to come from fossil fuels, and a ton of materials. So really, I looked at the infrastructure package, which was, they cut that EV allocation by a lot from the initial package. And everything else was pretty much focused more on, repairing highways and bridges and building out railroads and, replacing lead pipes and water systems and things like that. And that the ESG part really, really got cut down.
And that's why I like your work so much, because you really look beyond just what initial people would think about an infrastructure package, even though it might be, X of what people think on the face. You're getting behind it a little bit to see what actually is going to drive that. And I think that's where a lot of the real money is made. And I actually want to talk about this question that Corey put out. He says, do you differentiate RTY stocks that have plus VE earnings from those that have no, none, or minus VE earnings?
Yes. I mean, that's, I look at that a little bit, but really that's not how, that's not how I'm kind of looking at stocks that I picked that are in RTY, right? I'm looking at more like PE ratios.
Got it. Let's pull up some of those names maybe to look at. I like to see how they look compared to the Russell. I like looking inside these indices just to see, if they're getting the respect from some of these sectors that could be leading, maybe not now, but eventually.
Let me see. I'm not sure which ones are exactly. I have a lot on right now. Like, pull up like SD.
SD. So is that Sandridge Energy?
Yeah.
All right, let's take a look at it. Oh yeah, I mean, look at the difference. It's actually breaking down a little bit now here.
A little bit, but so is RTY a little bit.
Yeah, no, exactly.
But still, it still had a huge breakout, even though RTY was consolidating, right?
When you look at a stock like this, do you set up targets for these? Like, I mean, when did you start to look to get into this? What was your reasoning a little bit?
I got in at $1.80.
Well, yeah, you got a little.
I was in there early. Yeah, I got in at $1.80, and really, I only expected it to go to about $6. So really, I took off most of the position at $6. I thought that would be incredible for that, and then I just kind of let a little bit of it run, right? And I got kind of freaked out when it started to pull back. We went up, down, and then I was out on that like M shape, right? I was like, it looked double toppy to me, so I covered the rest.
So a question I have for you, when you have like a name like this that you like, or any of the names that you're trading in the energy side, and then you see what the Russell has done, does that build confidence in a position that's working beyond what the index is doing? Or do you ever use the index to potentially hedge it? I mean, what is your thought process when you see something like this do this, and then the Russell doesn't follow through, or any of the indices that are maybe you think should be correlated to something that you're looking at?
So yeah, I mean, definitely I'm looking at, I always, even if I'm not exactly trading, like the futures market, RTY, right? If I'm not, trading it, I'm consistently looking at it, right? Because I want to see kind of what the price action is. And, it started to roll over. I saw a double top looking. And so for me, that was an out to, cut that, cover that particular position. So I kind of use it as a guide when I'm not using it as a trading tool, like when I'm not actually trading it.
Yeah, I mean, one of the questions I have for you is because we are a futures background, you and I. I mean, that's where we come from. And I'm starting to trade crypto. I trade a little bit of stocks, but very little. I would use the term trade loosely. I mostly buy stuff on for longer term swing positions, so I feel more like I'm investing than I am trading. Coming from the future side, it's hard to compare anything what we do from a future side when we get into
Right.
something else because it's so much less active. What do you believe some of the skills you've learned from being a futures trader that have actually helped you with trading like some of these names?
I mean, I think that, and I use the word trading loosely because I, like you, hold stocks. I mean, I'm
Yeah,
looking at, I want to hold stock for a few months, right?
yeah,
So, but I think that really, trading futures, because the market's so fast and furious, and you're trading it on a daily basis. I think you recognize chart patterns a lot faster because that's what you're doing all day, right? Every day,
yeah.
in a plethora of different markets. So for me, I was like chart pattern recognition. Was a huge strength that I gained from, say, day trading the futures markets.
I want to stay on energy markets a little bit because you've been tweeting quite a bit about energy policy and this administration.
Right.
What are your thoughts about how they've done so far?
All right. So they get a D grade in my opinion, right? So we've got Biden, who doesn't know the difference between OPEC and OPEC plus. We've got AOC, who doesn't know the difference between oil, natural gas, and between imports and exports. You got Granholm, who doesn't know the difference between crude and gasoline. And you got Jen Psaki, who thinks that crude can instantly become gasoline. So, I mean, I feel like there's literally nobody in this administration that has one iota of experience in the energy markets. It's blind, it's like the blind leading the blind. It's that's my
What is that? So what does that tell you as a trader when you have an administration like this? Like, what is that making you think about looking for opportunities where? What is your thought process
Well, I
behind it?
mean, because and their energy policies are all over the place. I mean, and that's part of the reason why I'm so bullish energy, because they literally don't have any idea what they're doing. So I'm bullish energy. I'm bullish the whole sector. Like you name it, I'm like, I'm bullish nat gas. I'm bullish. I'm still bullish. Crude. I'm still bullish. What they're doing. They're they just decided to have permits on federal lands again, but they're going to up the government's piece of that. So, they're pretty much trying to, put a roadblock every place that they possibly can, which makes me very bullish on the companies that are still remaining, because we're still going to need fossil fuels, right? So the ones that are still staying, we had years, 2, 3 heavy years of bankruptcies and M&As, right? So there's not a lot of them left standing, which, to me, given that they're trying to cut them off at the knees, just makes me more bullish, like I said, and especially on the mid-tier companies that are still left standing, because we're still going to need fossil fuels. It doesn't, we're not going to be able to transition that quickly.
Yeah, I mean, that's the same feeling I get when I see any administration that doesn't feel like they have a strong hand of understanding at least the issues and how to address them. It always makes me, when you look at the commodity side of things or any market for that matter, you're going to say in this particular instance, it makes you very bullish. And then I want to pull up the chart of crude right now. And
So
when I look at it, so do you think that crude oil is this Has a lot of that been already thought of, or is it still?
I don't know. I mean, I think I think we're probably hit a point where this is going to like stabilize a little bit. I mean, you have to, and I sent out that seasonal chart since November 1st. This is I didn't know dump $10 in a day, but, I generally start looking, around the beginning of November for the market to start getting a little bearish, right? Because it's just a seasonal trade. And there's always something that comes up by chance that the seasonal trade follows through. So, I was already looking for weakness in the market. Again, I didn't expect a $10 drop in one day. But, I think that will stabilize here. Obviously, everybody's looking at OPEC tomorrow, right? Whether they're going to continue with the planned 400K barrels per day production increase, or whether they're going to hold off on that. So tomorrow will be very interesting.
Well, let's stay there for a second. What are the things that you'll be looking for them? Like, what would be some statements that they make that would say to you, you know what, this is almost a click in buy right now because this is happening. Walk us through.
Yeah, I mean, they were kind of very tight-lipped today, which is and talked about more about their future plans, which is kind of incredible. They kind of dropped a couple trial balloons, which they love to do. Like, we're going to go ahead with this plan 400K, or they usually have one of the oil ministers say, we back this, we back the production increase or something like that, to see how the market reacts. Market didn't really react that favorably for that. I do think they're going to try to do whatever they can to stabilize the market. They don't like this volatility either. Granted, $85 is, went probably higher than I thought it would go this year. My Q4, I expected Q4 to average about 75, which it looks like it is averaging 75. But I didn't think that. I didn't think we'd stay at 85 for any reason. We're just not there yet. So I think I think this move is getting pretty much done. Everybody, I mean, they cleaned house, right? I mean, literally cleaned house. They went through all the big strikes, forcing, dealers to have to sell into the futures market. And most of the specs and most of the longs are cleaned out if you're, besides, some of the big funds. If you look at, Goldman had a report out on it just the other day, or just yesterday. But yeah, I mean, everybody's cleaned out. So now really, we're just waiting for buyers to step in. And I think there needs to be a little more confidence in the market. First of all, right now, we need a little bit more clarity as far as Omicron is concerned, right? People want to know, our country's shutting down and how bad is this going to be? So, I think it's kind of a sit and wait. But I do think going into next year that this is still a very bullish market.
I agree.
I'd be looking to buy, I don't know that if, over the next couple of weeks, generally, January gets, more bullish, but I don't, we might just kind of go sideways here for, the next few weeks or so.
It's funny you say you thought that 75 would be the average. I don't think anybody thought the average would be coming in the ways of 85, 65, as volatile as we are. I know I've actually traded crude a little bit this month. It was one of my better trades. I was short it on a swing. I didn't, and it's always funny, it's like I caught it, and my hidden bias of being bullish crude, I covered it, and it was like, then I saw a pop. I'm like, oh, okay, I did pretty good here. And then all of a sudden the biggest move comes. Isn't it funny as a trader where it's like, it's my inner bias. I mean, I do let technicals drive me for sure. And I also read stuff from you, and, I listen to, like Eric Townsend's podcast. He talks a lot about crude oil, and just a lot of people that follow it. And it's like in my body, it's like I'm still bullish and I still fought it. And then, this move comes and it happens. It is what it is, I guess.
We haven't had a big move like that in a very long time either. You know what I mean? Like, remember, we used to have like $7 moves all the time. Like, that was not like unheard of. And it's been pretty much like a grind higher, right? For
Yeah.
like a year. So um, there you
So
go.
there's another question here. Thoughts on ERF or other Canadian oil and gas companies?
I Hi Corey. I'm in CVE is what I am, and I like CNQ too.
And this is not something I follow at all, so I have to actually pull this up. I want to take a look at them on the chart. So this
CVE.
is
Yeah.
Cenovus Energy.
Yeah.
And why this name?
It's
I don't even
another.
have data for
It's
that.
same thing. It's a nice mid cap, mid tier company. So I liked
Oh, big
their
breakout there too.
their book. Yeah, it's been a nice trade too. So, you know, nice PE ratio. Um, I like their presentation. They've got nice cash flow.
So when you look at some of these names, and oh yeah, there's a crude on the weekly. How about that chart? That's something you don't see when you pull up a symbol too often, is it?
Right.
Um, so when you see a lot of these names that you're still watching, and it looks like even the couple ones that I've pulled up just from you, they're staying bid compared to crude. And I've
Yeah,
already
I
kind of
mean, and
touched about
that's
this.
another thing too is we're kind of seeing like when we were grinding up, we saw crude and the equities kind of like hand in hand. Every time crude pulled back a little bit, the equities would pull back too. And really, what I've been watching over, the last, you know, uh, few sessions or whatever is, equities are staying a lot better, I should say, seeing bid a lot better than they're holding up a lot better than the actual crude market is. So that's a really good sign for the equity side.
When you're looking at correlations right now, what are the things that you're looking at for the markets you're trading? Like, what do you feel is the leader of correlations with the markets that you're following? That you'd say, if this starts to happen, I think this could start to create a domino effect in some of
This
these
is gonna
other
sound
markets.
nuts. This is gonna sound nuts,
Oh,
but
I love it.
seriously, seriously, take Microsoft and put it against any refiner. Literally, they're the inverse. And like at least interday, right? Microsoft goes up, the refiners dump. They dump Microsoft, refiners go bid. It's the craziest correlation ever on the planet.
I mean, where
I
did you,
watch it all day long, and it's nuts. And it's not so much on the, as a, chart comparison. It's more just watching the intraday moves. It's crazy. Watch it.
it's funny, as a trader, I always feel like when you look at any correlation, and I know what you say, you think it's crazy, and I found some crazy ones. I don't know that I've ever found one that's maybe as crazy as that
That's
one.
crazy.
That's really
I
gets
watch
really
it though.
digging.
I'm serious.
But isn't it something on how something could be so tied to something that you see these relationships and you're just like, as a trader, it just seems like such an edge. You feel like, wow, I almost don't want to talk about this because it's working so good.
I
And it's kind
know.
of weird, but it really works well.
Well, the cat's out of the bag on that one, but at least watch it. It's funny. And then the completely unrelated markets, which is even, crazier. But
Oh yeah. I mean, well, it's just like, I see so many people talking about crypto compared to equities and crypto compared to other things. And I will say this, that yes, I feel like there is definitely some, when you say correlation, there should be. Well, I mean, I always look at comparing anything to the equity markets, because there's so much money into the equity markets, that if the equity markets take a hit and people say, well, that will hurt crypto. Well, yeah, because I look at it like this. If you own a bunch of equities and you own crypto, and you start losing on one, you might be selling the other. I mean, that's just,
well,
human behavior, right?
yeah,
So
absolutely. I mean, or you're getting a margin call and you're
exactly.
selling whatever you have to sell.
So to say
Or
that yeah, I mean, that's why when I look at correlations, it's like you don't, they don't have to make sense, but sometimes you put together this puzzle as a trader and you look at it and say, this is happening, and whether it makes sense or not, I'm going to use it.
right.
And Trace, I want to take a quick break here in a second, and when we come back, some of the things I want to talk about is I want to talk about rates, because when we talked about Fed Powell, we talked about a lot of how I mentioned how a lot of people were really surprised at how hawkish he was. I think you even said a little bit, and I watched the curves a lot, seen the 2-year yields pop, and you've seen the 10-year and the 30-year they've come down a little bit. So I want to talk a little bit about that, because that's going to obviously matter, I think, in your oil stuff and equities as well. And then you've been trading palladium.
No, platinum.
Platinum. I've wrote palladium down. Platinum. So we're going to get into all of that. And everybody, put your questions in chat for Tracy. So when we get back, we're going to go over your questions, and we're going to go over some more markets. We'll be right back.
Replace your exchange with TradeStation Crypto. Dealing with multiple exchanges is complicated, and it takes time, except with TradeStation Crypto. Because we are not an exchange. We are a broker. You have access to multiple pools of liquidity, all in one platform, in one account, one way. Trade crypto your way, plus earn interest on your eligible cryptocurrencies. Get started in one click.
Get S&P 500 and NASDAQ 100 by the slice. Just 1/10 of the pie. Trade the tastiest index futures, micro E-Mini options with TradeStation. Get a piece of the pie now.
Trade the global markets with Trading Technologies. TT is the world's fastest commercially available futures trading platform, now with integrated tools for advanced options trading, cryptocurrencies, and trade surveillance. Learn more at tradingtechnologies.com. So first thing I want to talk about is rates. And I want to go over this 2-year, because I think that this is, first of all, I'm pulling up, I don't know if you're using these yet, but I really like these new micro treasury yield futures, because before I used to have to go to different places to be able to get what the yields were doing. And now you actually have a futures market on it. So I like the fact that being short the 2-year, if I think yields are going up, I can come in and buy the micro treasury yield futures and just trade the rate if it goes up or down, just to let, I think, simpler, and it's nice to look at. And this 2-year has just been look at this thing. 20 basis points to 63. And what has this been since September? This thing has just been on a tear. I mean, how much are you looking at short-term rates?
It's crazy. I mean, I generally, because of oil, so I usually look at like the 10-year break evens, right? And the 10-year yield, because, obviously if we're looking at inflation hedges, oil's been, a main inflation hedge this whole year, basically. So whenever you see those yields come down and you see inflation hedges off, that's, you see weakness in the oil markets.
So let's pull up the 10-year and you look at it, and what do you know what because right now you've got 1.48 on the micros. I'm just curious how close that is to what you would have on the rate that you're looking at for the 10-year.
Yes, that's pretty close.
Got it. Okay. So when you look at this, what are you looking for here? Explain to people what you're looking at.
Yeah, I'm just looking for, whenever we see, like a pullback in the yields, or, a pullback in the 10-year, inflation break evens, right? You're going to see money off the table, right? So that's what I'm kind of looking at. So whenever you see, bonds go up, yields come down, right? So that's what you kind of want to be looking at for inflation hedges, in particular for the crude oil market. Gold used to be obviously used as an inflation hedge, but it's broken. They broke it. They broke that market.
Gold is just I hate to say it, but it's just that gold. I don't want to get too far off topic because I want to stay on rates, but gold has just been a torture chamber for me. I have not been trading that good.
No. So yeah, so that's what I'm, looking at. Powell's been really hawkish. It will be interesting to see how, if they pile back into inflation trades again. They kind of came off this summer. We saw a dip in crude oil this summer, right? As people took those hedges off, you saw money off the table. then everybody piled back in by the end of the summer. Now you're seeing that pull back, so you're seeing money off the table as far as those inflation hedges, because oil's still very correlated to that right now.
Yeah, no, absolutely. And I'm curious, when you're looking at the rates and you're looking at the 10-year, are you looking for them to be the leader of what would be the next move in crude oil? Like, where does that rank in what you look at for fundamentals, news, everything else?
I would say that's up there. I would say two or three.
So what would be one or two?
So, I always look at basic fundamentals of the market, right? So, I'm looking at, broader based things like, global oil inventories. I'm looking at kind of, capital expenditure globally. So, how my process. It's like to go from the widest to come down. So, but yeah, definitely I'm watching, rates, it's right up there, watching that all day.
Talking to the crude oil traders out there, there's so many traders that are trading crude, intraday. What would you say to them to keep an eye on? Obviously, we know that technicals are important, but I think coming in even with the day trader mindset, what are the things they should be looking at coming into the day before they even step at the machine?
Yeah, if you're trying to day trade this, definitely look at the break evens, inflation break evens, right? You want to kind of be looking at that to see, where they are, what they've done overnight, where you think they're going, because that's really going to, it is more so correlated now than it ever has been. And it's always been correlated, right? But literally intraday correlated, where it was not necessarily so intraday, because right now we have like the OVX and we have the move. We have both of these very volatile, like the volatility for the Treasury market, and then you have OVX, the volatility for the oil market. So both of those are sky high right now. So you want to be looking at that, like anything over like 70, 75 in the move index, starts to get a little hairy. Anything over 40 and the crude volatility index gets a little hairy.
It's interesting because you've got so many crude oil traders. And it's one of the most popular products out there. And I think that so many crude oil traders come into it. Let's say so many newer and more on the retail, not seasoned crude oil traders come in. They just trade the front month. They trade it only on order flow or technicals. When they're competing against some of the best traders in the world on the energy side,
and algos,
and algos too. Your competition in that is so high that I look at it and say to them, and that's why I asked you that, is like, you've got to look at these things beyond it, because even though I know that order flow tools will work, I know that technicals will work, there's no doubt. And everyone will say price is what pays, and I totally understand that. But when you get into commodities, and somebody like myself, who's been mostly an S&P trader, when I started to get more into some commodities, specifically oil, even though right now I got the micro 10-year yield chart up, that without knowing these bigger picture themes and understanding what's going on, I find it to be difficult even to be that successful as a short-term day trader, because of how much of an impact of what's happening beyond just a front month contract. Yeah,
absolutely. You need to be doing that too. And if you're newer to commodities, to commodity markets, what's great, I think, is now, especially for crude oil, they just added, they have, minis and micros now. So, you don't have to jump headfirst into the big contract.
Oh, I think that, the micro crude oil, I've started using them a little bit, and
it says you can put a bunch on, right? And you can, scale out instead of just Hail Marrying one contract, say.
Well, that's the whole thing, is that I think that people, even bigger traders, like I could trade, quite a bit of crude oil contracts if I wanted. That's not the point of like the micro. I think even for a veteran trader, is that I look at it and say, I'm less price sensitive. I can still trade as big as I want, because I can still accumulate as many micros as I would like, right? And
Right.
so, but I look at it as I'm less price sensitive on entries and exits. I can go to scale,
Right.
versus, obviously if you're going to be trading a lot of contracts, you probably want to go back to the primary crude. But I like to use a lot of the times the micro products, and not just in the crude oil, but in the other products, just because if I feel that I like an area, I like it as just a starter,
Yeah.
because you get a lot from just that feel,
Yep. I totally agree.
especially when we start getting volatility like we see. I mean, as much as I want to start being long crude, I don't have a technical setup just yet, but
Yeah.
I look at it and say, if I start to get one in this type of volatility, you go to the micros, it allows you just to manage, your average position, I think, just a whole lot better and more effectively. One of these questions that's coming in from Dan is thoughts on, thoughts on Guyana.
Guyana. I
I
like
was going to say,
Guyana. I do like Guyana. I think there's a lot of potential there. Also, if Namibia, there's a lot of potential there too, offshore.
so you think the potential supply there to help meet demand,
I
right?
think there's, yeah, I mean, I think that, those are kind of where the big offshore projects are happening right now. There's not really a whole lot. There's not really a whole lot going on. Mostly it's off the west coast of Africa and the east coast of South America, where the big new projects are, aside from obviously Russia in the Arctic.
This has turned into obviously mostly a crude oil conversation, which makes sense talking with you. But one of the things I want to ask you, and I think a lot of people have asked me, and I have no idea of this answer, is that how much has this administration had an impact of what we're doing here in the United States? Because you see a lot of the talking heads and a lot of people that, beyond the political aisles of things that aren't energy experts. But how much has what's happened here in the U.S. changed how much oil that we're producing? And everybody says that we were near energy independence. Is that exactly true? How much of that have we lost? Where are we with that?
Well, yeah, I mean, it's again, it's it's roadblock after roadblock after roadblock. That's another reason why we likely won't ever, we won't ever see the production, the 2019 high production that we had in the United States. We're never going to see that again. First of all, there's no capex. Nobody wants to put money into the market. They're making it extremely difficult. We're burning through DUC inventory, which is drilled but uncompleted wells. So we're burning through that inventory. So we don't have that, we don't have that big cushion that we used to have. Rig count has, jumped up some. And generally, I don't like rig counts, except for, we had such a dive on rig counts that it actually does matter right now. But you're seeing oil price skyrocket, and rig counts definitely not keeping up. So what does that tell you? That tells you that we're not actively, they're just not actively pursuing drilling like they once did. The money's not there. Investors don't want it. Investors are looking for free cash flow, for dividends, for stock buybacks, and being conservative fiscally. They're not looking for you to be, how it, the Wild West, how it used to be when everybody, when shale first started and everybody is out there just drilling like crazy.
I want to shift to metals. Thanks for clarifying that a lot. I appreciate that. I mean, it's it's good to hear facts versus a lot of people's just opinions on what's really happening out there. And I want to go to metals because we talked about gold. I might as well just let's just pull up the gold chart. But we're going to get to platinum, which is a market.
Pull up the painful gold chart just because.
Yeah, let's just look at it. Just to see the pain, feel it. I mean,
we had that nice V recovery, and then it's literally done nothing.
The one thing that I'll say about gold is that, and look at it's. I don't think it's ever been the easiest trade.
No,
but
I think intraday, if you're just intraday trading it, there is a lot of times you get those nice, $20-$30 moves, right? So I think intraday, but if you're trying to swing trade this, it's virtually,
it's much more difficult. And that's exactly where I was going to go with this. One thing I was going to say is that the one thing I've learned about watching gold for many years now, and specifically in this time, is that when I try to buy gold for like that long hedge against inflation, hedge against the Fed, and I just hold that trade and I think it's just going to happen, the Peter Schiff trade, I just get my butt kicked because it
Yeah.
just doesn't seem to work, right? But when you just look at the intraday technicals and the way it trades, this is one of those markets where I feel that thinking too much about fundamentals actually hurts you here
I agree. I
versus
totally agree.
just following what the chart is doing.
I mean, practically every morning between 8 and 9, it dumps. I mean, I mean, literally almost every morning. So, I mean, you could trade it on that alone. You probably like at 9 times that it would probably be like a 9 out of 10 winning trade if you just sold it like 8 in the morning.
So actually, we're getting questions about natural gas as well. We'll get to there in a second, but I want to go to
platinum. I love platinum. So really, I mean, this has been a really great trade. Anytime you've gotten, under like $1,000, I mean, it's just been, and I don't swing trade this either, but this is one of my like, maybe I'll hold a couple of days, maybe I'll be an intraday trade. This is kind of my the only thing I would say probably the only futures that I still really just day trade or hold maybe a couple of days. Yeah, I love this.
Why is that?
Because it's literally it's so technical. All you need to do is draw horizontal lines on this chart and it's perfect. Literally, that's all you need to do. Yeah, I mean, it hits the same levels over and over and over and over again. It's so technically traded because it's not, it's not that crowded. There's it's not as liquid as the gold market. Kind of, it's kind of like, remember we were talking, I think it was like a couple of years ago when we were talking about this, why we were talking about the Russell and how, it's because it wasn't, as liquid as the market, you could kind of see, how it moved a lot better, like with the futures, just looking at the order flow. And platinum is kind of the same way. It's just it's a lot less liquid than, you don't have all the banks in there trading this product, right?
Well, this goes back to why when the 10-year ultras first came out, I started trading that product and I did great in it for a good period of time. It was like, I felt like it was like when I first started to trade the minis, the book was a little bit thinner. You could see when things were starting to come in. If it reacted off your technicals good, you get that little splash move. Yeah. You get in and get out. And, as a day trader, I really like that. And going back to the platinum, what is a typical range in this? Because I mean, this is a market I really I don't watch it at all. I mean, like how big is a typical range in this?
I mean, I think you can get, it depends, but, you can get $20 moves, all the time. You could get $5 moves literally all day long if you are just a scalper. But, I look for a little bit, I look for maybe, $20 to $50 moves, which you can get all the time.
What's tick value on this? Is it $10 a tick?
No, it's half.
So, it's okay. $5 a tick. Yeah. So, I mean, you can play it. It's got some some potential for some intraday action.
It does. I like it.
So, I mean, let's go to natural gas now. I don't even have natural gas up. It's so funny. I moved it down on my chart because this.
Yeah, I know. I don't know. I don't really trade the futures a lot, or I haven't traded. Let me put it this way: I have never traded straight up nat gas futures a lot, and I probably haven't traded the futures now in 5 years.
What are your thoughts on it when you look at the energy sector as a whole? We covered a ton on crude oil today, but what do you? I mean,
I'm very bullish. I'm very bullish natural gas, and whether that be on the equity side, right? And that's how my play is. I'm looking at just pure nat gas players like Cheniere, LNG. And that's how I'm playing that. But I'm very bullish nat gas because it's an excellent transition fuel. What I really like is that, while we're trading at $4.29, Europe's trading at $32, which makes our exports look very enticing because even with the cost of transportation, you're still coming under that $32. In fact, we just became China's number 2 supplier, beating out Malaysia and Indonesia, places that are literally 10 times closer.
Oh, I did not know that. And so, and the reason is because of our pricing, our
Because the
ability
pricing
to.
is, nothing. So you add on cost of transportation, and we're still coming under JKM, which is, Japan Korea marker, which is the Asian grade, or TTF, which is Dutch, but that's the Europeans. So, I mean, we're trading at such a discount to either one of those contracts that that makes our oil look, that makes our gas look very enticing.
So, I mean, I know you keep saying you're bullish pretty much the whole energy sector.
I
Right?
know,
I mean,
I sound like ad nauseum, don't I?
no,
Really, for
that's
the last year.
no, but I mean, to me, I think this is important. I mean, that's kind of where I want to close out with you today, is that when you do all of your homework and you sit back, I mean, it's funny, from when I first met you to now, you've become more and more macro. I mean, you've always had a talent for that. You've always been somebody who I've known to do a ton of reading. I don't think people know how much reading you really do.
I do a lot.
A lot. And they don't know how much work you put into behind the scenes, and the stuff you're tweeting out there we talked about this in our recent shows. I think it was maybe a year or two ago, and how it's really just you talking through the picture that you're trying to paint and what's happening,
Right.
in the macroeconomic side of things. And so is your number one play right now, really, from everything you look at, bullish energy?
I'm very bullish energy, and I'm bullish in industrial metals right now.
Industrial metals.
And for the shorter term base metals, depending on when this infrastructure package spending actually starts happening.
So, I mean, I don't know, where are we exactly with this infrastructure package to know? I mean, do you know what? Let me put it this way: like, do you know if it's not fully approved? So, do we know like what areas?
Oh, the Build Back Better.
Oh, the Build Back Better. That's what I'm thinking of.
From that, yeah.
Yeah,
Build Back Better. I literally have no clue. There's so much pork in that; it's ridiculous.
Yeah.
So, I don't even know what to expect from that. I think that it's going to take a lot longer to pass than what they want. I mean, they're adding 87,000 IRS people. They want to check your $600, bank account deposits. I just don't see that, I don't see that flying. I don't see that.
Yeah.
Those things.
That's exactly what I was thinking. I know I misspoke when I said the infrastructure, because to me, there's so much money coming from there. And I'm wondering what you were thinking on that, but that is not close to even.
Yeah. I don't think it's close to even, being done. And so I haven't really, I read kind of the basic outline, and I just thought this is not passing anytime soon.
Yeah, and it doesn't appear to be. So it's the bullish energy.
So bullish energy
and industrial metals.
And industrial metals. It's really what I'm kind of bullish from, and I say for medium to long term, right? Those are like trades I'm holding on to.
And ultimately, what does that tell you about, I guess, our economy as a whole, if that's your play?
I think that, even if the thing is that for the very first time, we have a real supply demand issue, right? We are undersupplied, right? And we're looking at capacity. I mean, U.S. doesn't have capacity to ramp up. The OPEC really doesn't have as much spare capacity as they say that they do. So really, we have a supply and demand issue, and I think the economy is still pretty strong. But even if we see a pullback, right, what we're seeing is that uneven recovery around the globe. So if you have we're seeing weakness in Europe right now, but we're seeing recovery in Asia now, right, and so. when you have to take that when you're talking about a global product or global products, you kind of have to take that into account, that it's not the whole world is not going it's not on the same growth pattern, right? So it's been kind of recovery in one place, then you're seeing kind of a pullback in the other place, depending on what kind of policies you have going on, depending on new variants popping up, what your country is doing as far as addressing those issues. So watch the uneven recoveries around the globe, right? When you're trading like global commodities.
Yeah, and Tim basically got in front of where I was going to kind of go with this next. Is like, do you see the direct correlation between energy prices and U.S. equities? I mean, it almost sounds to me as like this bull market is just it's got legs across a lot of sectors essentially now.
Oh yeah, I mean, absolutely. And so, I think, like I said, energy prices are obviously, going to be coordinated to the energy equity markets. But what we are seeing now, like I said, we're seeing a little bit of divergence where it's not like tick for tick, right? And the equity side is holding up a little bit better. But yeah, I mean, obviously, energy prices are going to correlate not even to just energy equities, because energy is in every company's bottom line, right?
Yeah, I mean,
No.
that's what I'm saying. I mean, you're looking at it, it's going to be, if that's what you're the most bullish on from everything you're saying on the macro side, then that essentially, to me, sets up for, I think, strength across a lot of places.
Yeah.
Which makes it, pretty interesting. I know. So what do you see between now and the end of the year? Just kind of what your thoughts are. I mean, we talked about kind of what we saw in the S&P, but like, what are you looking at between now and the end of the year? It's always an interesting time to trade. Are you
Yeah.
not looking too closely at anything, or what are you
I'm not
seeing?
looking too closely at anything. I mean, I think crude oil probably moves sideways, into the end of the year, probably, gaining strength maybe at the very end of December and then into January. I think, I don't know, I think the markets, I don't see like this huge Christmas rally, although I would welcome one.
Yeah.
We might be sideways for a little bit. I think because there's just so much uncertainty now with this Omicron variant, now with Powell being so hawkish, right? And so it's kind of all dropped up. So I think we're going to have to, give it a couple weeks to kind of sort itself out and really kind of see where our footing is, because we're seeing some, countries shutting down and things like that. Whether that's too early or not is up for debate, but I think we need to kind of wait these next couple of weeks to see how this stuff shakes out. But I definitely welcome being long equities. I would definitely welcome a rally at the end of the year.
So our friend Jimmy Jude on Twitter, he said something the other day that I thought was spot on, and I'm not sure if you saw the tweet or not, but he talked about how with Omicron or any of these new variants that it's just like 9/11. I mean, you and I remember this like it was, probably yesterday, how each of these headlines, remember, it was anthrax, it was this and that, and
less and less and
less and less and less. Do you feel that way about this?
Yeah, I mean, I kind of thinking, obviously, literally we had, last December was the scary variant. Then in July, we had literally, it's been every 6 months. It's crazy that a new scary variant is. And so I think that definitely the market's holding up better this fourth time, right? Because the first time the market really tanked, but it's been kind of less and less every time.
Yeah, well, just look at what just recently happened, and this is something I've been thinking about. I don't have any positions in S&P, NASDAQ, or Russell at the current moment, but I look at how are they taking this news with Powell? How are they taking the short-term uptick in rates? What's happened in crude oil? Looking what happened with this new variant. I look at all these different things, and I'm like, took it pretty well. I mean,
it did. No, it did.
It took a lot of hits that were at different times. And
a lot at once, right?
Yeah, exactly.
Sure.
In a period of time, right? So it's just, and the end of the year for me is typically not something that, I like bull markets end of the years a lot of times, because as it does get slow, if we start to just grind up, I kind of know that trade kind of stays with it. We're volatile at this point, kind of breaking down a little bit between moving averages. So I like that just as a little bit of gauge, but I know I don't expect a ton either, but I do look at it and say, if the rally does come, I would welcome it, and I would trade it. I wouldn't be scared at all to continue to buy toward another new high, because it could happen. But
we'll
Trace, yeah, we will see. I can't thank you enough for taking the time, coming on live with me, taking questions from everybody.
Yeah.
Always appreciate talking with you and seeing you. Where can people go to learn more about your letter that you put out regularly now?
So go to hedgefundtelemetry.com. It's actually on my bio on Twitter. You can just click the link, and then obviously on Twitter.
Yeah, go Chigrl on Twitter. That goes without saying. Everyone knows who she is. She's one of my faves. So Trace, thank you so much again.
Thanks.
Always appreciate your time. Have a wonderful Christmas. I look forward to the food pics. I'll tell you what,
you got it.
When we get together, I was hoping eventually you'd be back living in the States, so it's a little bit easier of a trip for me. But I need to go, and I need to experience some of these meals that you're making live. I mean, you're killing me with some of these pies and stuff. I'm like, come on, man.
Come on.
Oh, and that stuffed rabbit, that looked great.
Yeah, that was good.
Yep. All right, Trace. I'll see you next time. Have a great Christmas. All right, I'll see you.
You too.
All right, everybody. Thank you so much for tuning in to the podcast today. Remember, if you're watching this on YouTube, give us the thumbs up and hit that like button. If you didn't enjoy today's podcast, give us the thumbs down and tell us why in the comments down below. Never miss an episode of Futures Radio Show. It's available on all the different places where podcasts are available. This will go to all of the audio podcasts once we're done recording, so look for that later this afternoon. And like I said, never miss a live stream, and just by clicking on that subscribe button here on YouTube. Like I said from the beginning, I hope all of you guys had a wonderful Thanksgiving and have a great rest of the trading week. I will see you guys next week. See ya. Thank you for listening to Futures Radio Show. If you enjoyed the show, please leave a 5-star review on iTunes. Never miss an episode. Go to anthonycrudele.com and get on our email list for show notifications and for free content that is exclusively for subscribers. Also on anthonycrudele.com, you will find tons of videos and education on trading futures, options, and crypto. Past performance is not indicative of future results. Opinions expressed are solely my own and my guests, and they do not express the views or opinions of my sponsors. Futures Radio Show is produced by Crudele Productions.